Good afternoon, everyone. Today we'll talk about data analysis of exchange rates of GBP and the USD against MYR. We're Group 2. Our group member is Sun Xiaolu, Chen Letian, Gao Suyu, Guo Yanru, Zhang Chenxi. Now I will introduce background of country.
The U.S. economy is performing strongly with stable GDP growth, controlled inflation, and moderate unemployment. The Fed's monetary policy, characterized by regular interest rate adjustments and quantitative easing measures, plays a key role in shaping the strength of the U.S. dollar/USD. Major sectors such as technology and finance drive economic activity, while trade dynamics with major partners such as China and the European Union affect the U.S. dollar exchange rate. In contrast, facing economic uncertainty post-Brexit, the Bank of England navigated its interest rate decision to stabilize the British pound GBP. Despite the challenges, the UK maintains important trade links with Europe and the United States, which affects the exchange rate of the British pound. Political developments and global economic trends have further influenced the relationship between the US dollar and the British pound, highlighting the complex dynamics of the international currency market.
We're 6 months into this pandemic, and what we're seeing is that it's really something that's unprecedented. We've seen huge drops in consumer spending, which in turn has impacted small businesses, which in turn has impacted employment. It's really unique in the sense that it doesn't look like previous recessions. When we look at who's been hit hardest, one thing we see is that consumer spending has dropped precipitously, especially right after COVID cases started going up in early March. But something we saw is that the drop in consumer spending was most extreme with high-income individuals. So it was high-income families who really stopped spending. And in part, this is because high-income families can self-isolate, they can work remotely, and they're the ones who are really not going to their local restaurants, local bars, and local small businesses. Usually these higher-income communities are somewhat buffered from these economic shocks. But in this case, it's actually those low-income workers who are working in these high-income communities who are facing the biggest brunt of this crisis. So for example, I'm in New York now. If you are a low-income worker and you are working in a restaurant or bar in Manhattan, a very high-income community, there is a 70% chance that you...
For data types that have the date, the exchange rate of USD and GBP. Given the data, the following data analysis methods can be applied. Time series analysis, summary statistics, compute mean, median, standard deviation, and other summary statistics for the USD and GBP exchange rates. Distribution analysis. Distribution analysis analyze the distribution of exchange rates using histograms and density plots. Key insights: the GBP exchange rate has a higher mean and maximum value compared to the USD. The standard deviation is similar for both currencies, indicating comparable volatility. US dollar USD to MYR exchange rate scenario. Between 6 years, the exchange rate of the US dollar to the MYR remains generally stable with slight fluctuations. There are notable peaks during last 2 years, which may be related to global economic events or specific policy changes. Pound sterling GBP to MYR exchange rate scenario. The pound sterling to MYR exchange rate shows a similar stabilizing trend between low years, but with slightly more volatility. Again, there are significant fluctuations and peaks between last 2 years.
The first is currency diversification. Given the fluctuations and volatility indicated in the exchange rates for both USD and GBP, investors might consider diversifying their currency holdings. By investing in both currencies, one can mitigate the risk associated with the performance of a single currency. The second, long-term investments in stable periods. Observing the periods of lower volatility, as the moving averages might suggest, could provide safer entry points for long-term currency investments. Focusing on periods of economic stability or strength. The third, forex trading. Active trading might be a viable strategy for experienced traders who can leverage the volatility for potential gain. The similar levels of volatility in both USD and GBP exchange rates suggest opportunities for forex trading strategies like swing trading or arbitrage. Due to the impact of geopolitical uncertainty, the world currency market shows significant volatility. By analyzing the exchange rate movements of the US dollar British pound. We can see that the two currencies fluctuate to a similar degree, indicating that they are both affected by global political and economic changes. This uncertainty usually leads to sharp fluctuations in the value of the currency, which in turn affects the investment strategies of investors and the economic policies of the country. Investors may need to diversify their investment strategies and hedge their risks using financial instruments such as options, futures and forward contracts to protect themselves against adverse currency movements. At the same time, governments and central banks may need to stabilize exchange rates and economic conditions through measures such as money market intervention or interest rate adjustment.